From January, foreign investors selling Nigerian shares will pay 30% capital gains tax, up from the current 10% unless they invest locally. The measure, part of Nigeria's 2025 Tax Reform Act, is meant to raise funds and curb speculative trading.
And one of the ways government borrows is to go to capital markets and then list securities there. If you bring in this investment and you cash it after a year, they go back again to the market to go and borrow again. But if you invest and you keep it on and then you reinvest the profit, you're reducing how many times government goes to market, if you know what I mean. So they can plan longer.
Nigeria's stock market has surged nearly 40% this year, powered largely by foreign inflows that make up about 21% of total trades. But traders say the new tax could slow that momentum and dampen investor interest.
The announcement has really rattled the market because if we are looking for foreign investors, we want people to be included and participate in our markets. When they realize that they are going to be paying so much, as against what they bargained for when they were coming at the entry point, I want to say that it's going to be a kind of disincentive to them, and the possibility of them, trying to reduce their portfolio in Nigeria is very high.
This tax hike is one of several fiscal measures under President Tinubu's reforms, from removing fuel subsidies to floating the naira. While these steps aim to stabilize Nigeria's finances, the challenge remains keeping investors engaged as taxes rise. The government is also introducing a 20% income tax on foreign workers earning above $521 a month. Despite these measures, tax revenue still accounts for only 10% of GDP, far below the IMF's 15% target.
They're giving them enough incentive to just keep this money here for us to use. And then even more incentive there's more incentive when they now say to them, if you don't take this away, then I'm not going to tax you. If you reinvest that profit to listed and unlisted securities, I will withdraw my tax. So that's another additional incentive for them to keep the money.
If the government can reconsider its stand on this, especially maybe reducing the percentage, from that 30, 25 to maybe 20, that might help matters. At the same time, I want to say that I want to recommend that for local indigenous companies that have been paying dividend regularly to investors, maybe they could get some tax relief, that will enable them to do more.
Analysts say the policy's success will depend on how well the government balances its need for revenue with maintaining investor confidence. Kelechi Amekalam, CGTN Abuja, Nigeria.